I'm Sam Baxter and I'm a mortgage consultant with Investec Professional Finance, and we primarily look after doctors, dentists, vets and health professionals for their home loan and investment loan requirements. Today I'm just going to run through 5 quick tips for home buyers. The first one is saving and borrowing for your new home. The second one is finding the right loan. The third one, finding the right property. The next one is mortgage insurance and how to avoid paying mortgage insurance if you are a medical or dental professional. And the final one is the actual buying process. You might have a ballpark figure of how much you want to spend and what area you want to buy in, but it's a really good idea to start by figuring out exactly what your budget is and what you can really and realistically afford. To estimate your borrowing capacity, you need to figure out what your total overall costs are going to be, what your deposit is, and what your monthly capacity to repay is. The debt that is taken into consideration when applying for a home loan includes your current credit card limits, personal loans, car loans, and you may even have a help or a student loan. It's also important to include any other plans that you may have for the future in your calculations. These things include, are you planning for a family? Will you or your partner be on paternity or maternity leave? Will you want to set up your own private practice or join a partnership? Might you need to move interstate for a job position? Even with these considerations, you never know how your health, income, and personal circumstances may change. So you need to be comfortable with the repayments you will make, and this in turn will affect the amount you will decide to borrow. The second tip we're going to talk about today is finding the right loan. Before you embark on buying a property, we recommend that you seek professional financial advice that takes into consideration all of your own personal and financial circumstances. It's all too easy to sign up for a loan that meets your immediate requirements, but you really have to think about your medium and long-term goals as well, so you really want to get the best loan that suits your long-term requirements. Choosing the best type of loan can be really difficult if you don't know the pros and cons of each different type of loan. The first thing to understand is the rate of interest that you're being charged and whether that interest rate will change or it will be fixed for a certain period of time. There are a number of loan options which are available to you. For starters, principal and interest versus interest only, variable loans, fixed loans, split loans, and lines of credit. Here are just a few traps or tips that you might want to consider about a few different types of loans. Fixed interest rate loans are great. They allow you to lock in certainty for the future, but you've got to remember that it is always very hard to actually pick the market and beat the banks. Fixed rates give you that certainty, but there is also the flip side that you may actually pay a penalty if you break that loan and pay it out before the end of the actual term. Another type of loan that I want to talk about briefly is an offset account home loan. An offset account is a transaction account which is actually linked to your home loan. Funds in the transaction account actually offset the loan balance on your home loan, which can reduce your interest repayments on a monthly basis. An offset account can also be excellent because it allows you, if it's your current home, to protect that loan balance. So instead of paying down the actual loan balance, you can pay money into the offset account and you can actually save that loan for future tax deductibility if that loan ever becomes an investment property in the future. The next one that we're going to talk about briefly is finding the right property. Ideally, of course, you'd want to buy in an area that suits your needs and lifestyle, but you also want to think about whether this property is actually going to make a good investment and suit your future investment requirements. It's very important to consider environmental factors when purchasing a property. So you want to actually visit the property throughout different weather conditions and different times of the day and night, just to really get a feel for that property to make sure it's right for you. Here's a few tips that can really help you to find the right property and also to help to avoid some hidden expenses that may pop up. Some things to look for that might entail hidden expenses when purchasing a property. Roof leaks and blocked or broken guttering. Visiting on a wet day is the best way to check for these, otherwise look for signs of water damage. Substantial cracks in interior or exterior walls, leaking pipes or waterproofing, drainage and wastewater pipe problems, roof damage, floor damage, and checking whether there is asbestos in the property or not as well. The next thing I want to touch on is something known as lender's mortgage insurance. Lender's mortgage insurance is a premium which is paid by the borrower, you, to actually protect the bank in case of a default on the property loan. As Investec, we actually look after medical and dental professionals every day. We actually see that your best asset is actually your ability to generate income and repay the loans. Therefore, Investec, for doctors and dentists, will never charge lender's mortgage insurance on a property loan. Most lenders will actually charge mortgage insurance when you borrow more than 80% of the property value. Investec has an excellent range of loan options for medical and dental professionals, none of which will incur mortgage insurance, be that for an investment property or for a home purchase. So it really is an excellent option, and for doctors and dentists, just remember you should never be paying lender's mortgage insurance with any lender. The next thing I want to talk about, and the final thing, is actually the buying process that you'll go through when you're actually purchasing property. There's two major ways that properties are sold in Australia. The first one being a private treaty, where you negotiate through an estate agent generally with the actual vendor of the property to reach an agreement on that property. The second one is an auction. Now, by purchasing under private treaty generally gives you a little bit more time and takes a little bit of the stress out of buying the property, but isn't always available. There's a couple of benefits to a private treaty. It takes a little bit of the stress out of the property purchase because you're not actually buying at auction. You will generally also get a cooling off period once you've signed the contract, which will generally give you, depending on which state you're in, a couple of days to definitively make up your mind about that purchase. The first tip for buying at auction would be to actually drive around and attend a few auctions before you actually go to the auction that you're thinking of bidding at. The second one would be to have a pre-approval in place, so have your finance sorted so that you know that you are approved for that loan. The third one would be to actually get a building and pest inspection completed on the property to make sure there's no hidden surprises, and also to get a valuation done on that property through the bank that you had the pre-approval with, just to ensure that that finance is definitely in place for the purchase. The final tip would be, because an auction purchase is final, you'll also want to have a deposit available on the day of the purchase, just to ensure that that property is secured. Thanks for your time today listening to the 5 tips regarding residential property purchase and finance. If anyone has any queries regarding residential finance or investment finance, please feel free to call through to Investec in any of our state offices.